Who knows what Jay-Z, J.K. Rowling, Bill Gates and Oprah Winfrey all have in common? Okay, I will tell you then. They have all overcome failure in one shape or form to go on to gain success in their respective careers. Welcome to My Perfect Failure. Join us as we delve into the world of our perfect failures. We will interview, explore, and discuss how our perfect failures can lead us to success. Join us and tune in.
Welcome everybody to another episode of My Perfect Failure. Today, I'm super excited because I have another fantastic guest for you. So my guest today is a commodities trader, author, and columnist whose articles have been featured in the Wall Street Journal, New York Daily News, National Review, the Daily Wire, and other publications. His newest book, Life in the Pits, My Time as a Trader on the Rough and Tumble Exchange Floors. An interesting, sometimes hilarious, but also thoughtful look at the demise of the iconic commodities exchange trading floors that were once so integral to the engine of global capitalism. So a very, 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 very warm welcome to My Perfect Failure, Brad Schaeffer. How are you, Brad?
Doing well. Thank you for having me. I appreciate it.
I'm excited to have you on My Perfect Failure because I don't think I've had anybody on My Perfect Failure previously that worked in the cutting edge of those trading floors that I was saying before we hit the record button, which seemed very intense to me, very engaging, and you would hear about all these things that are going on. Some were very good, some very bad, just in terms of losses and gains. And I always felt so far removed from it. So I was excited when we connected, and you agreed to come on the podcast. And I know you've got a book coming out that might be out that we're going to delve into. But I guess what I'd like to start is trading. How did you get into trading in the first place?
Well, like I said, first, thanks for having me. It's sort of a circuitous story, and one of the reasons I kind of wanted to start it with my personal experiences is because I thought that my path to the floor was it was both atypical and typical, because the trading floor was one of those things where it helped to know people, and it helped to kind of be in the Chicago area, which is where I was trading. But basically, to give you the quick story is I went to, as you can see on my little shirt here, I went to the University of Illinois in Urbana-Champaign, and I studied speech communication if I recall, I don't remember now. It's been a while. It's been almost 40 years, but I studied history as well. And when I came out of when I came out of the college and I went back home, I grew up in a suburb of Chicago. I didn't really know what to do with my degree. I didn't, it wasn't like I had a calling to be a doctor or a lawyer or anything like that. So, but I fortunately had a skill in artwork of all things. And so I had gotten a job in Chicago in a little boutique promotion / advertising agency. So I began doing artwork on the floor, in downtown Chicago, and it was interesting. But my older brother, by 5 years, had been a trader on the floor of the Chicago Mercantile Exchange, which was one of those iconic trading floors of yore that people think about when they think about the rough and tumble trading pits. And he basically invited me to check out where he worked one day. So he took me over to the exchange floor. I remember when I went to the Merc, I remember pushing through those big, heavy tinted doors, and I stepped onto this gigantic arena, like a gigantic hangar of, I believe the number was like 1,500 people, screaming, yelling, just pushing and shoving, the huge analog, numbers up on the top there, constantly changing everything from, and I could see they were trading everything from interest rate futures, which were Eurodollar futures, to currencies, everything from, back then before the euro, there was the British pound, the Canadian dollar, there was the Swiss franc, the Deutschmark, Japanese yen. Over on the side, there were these guys trading cattle. They were trading pork bellies, live hogs, you name it. And And then there were guys trading futures on the S&P 500 index. And there was a sister exchange down the block called the Chicago Board of Trade, where they traded treasury bonds, they traded wheat, grains, things like that. And Paul, I fell in love with it immediately. I was like, this is exactly where I'd like to be. It just clicked. So I quit my job as an artist, and I started as a floor clerk, which was the equivalent on the commodities exchanges of, you hear about runners on the floor of the stock exchange. So I went from, I basically went from being an artist in an ad agency to schlepping coffee for guys on the trading floor. And I eventually became what was called an ARB clerk, which was one of those guys who you see doing the hand signals, flashing back and forth. And I eventually, through that, I was sent to New York. I did well. So I was sent to New York by my boss and it happened to be, I landed there right during the Gulf War. And that's where they traded crude oil on the NYMEX, on the Mercantile Exchange. Mm-hmm. So I had a front row seat to the crude oil trading during the Gulf War, which was a fascinating experience. As a fly on the wall looking in. And then I got as reward for my helping out my boss set up a new group down in New York, I got what they said, I got my badge, which basically means I got sponsored for a seat on the exchange. And I was given an account, and I was thrown into the Eurodollar options pit. And within like 2 years or so of being somebody drawing on doing charcoal sketches for Quaker Oats, Chewy bars, I went from doing that to moving millions of dollars of Eurodollar futures and options and this exchange floor, being pushed and shoved and screaming and yelling. And basically that was the beginning of my career in commodities trading. And I've been doing it either as a trader or as a broker and on the floor or over the counter ever since. And I still do. I still trade to this day. I trade my own.
Trade. Okay.
Yeah, I trade my own money now. So
I didn't know that.
Yeah, but the reason I started off my book like that was to show people that, back then, it's not like it was, it might be like for an investment bank or a hedge fund where, let's say you're a computer whiz at MIT or something like that. And what will happen is these guys, these recruiters, maybe like BlackRock, whoever it is, they'll come in and they will pick, the classic college recruiting, scenario. Whereas it wasn't like that on the floor. There weren't guys from trading pits coming down to University of Illinois to interview us. You kind of found your way on there. Either you knew a guy who knew a guy who needed or in my particular case, it happened to be my brother, and he got his job through his girlfriend's father, and so that we say in Wall Street, the three favorite isms are capitalism, cronyism, and nepotism.
All right, really?
So I was a beneficiary of the third ism of that. I'm not going to lie, and I say in the book, knowledge is king, but who is the all-powerful queen in life.
Yeah, absolutely.
So that's how I got there, but a lot of guys I knew got there from different paths. In fact, one of the top traders in the bond pit, which was really the largest futures pit in Chicago at the time, that was again on the Board of Trade, which was down the street on LaSalle Street, but there were sister exchanges. He started off as a meat packer, and the people I stood next to on the floor, I always say the guy on my left was a high school dropout tennis pro. The guy on my right was a Harvard law grad. I stood next to a former Chicago Cubs pitcher. One of our better traders in my group was a female art historian.
Really
major
diverse.
Yeah, very, very diverse in terms of there was no path to the floor that was the standard path.
Okay. So can I ask a question around? Mm-hmm. So you mentioned you go on the floor,
mm-hmm.
and you were doing lots of things with your hands there.
Yeah.
And I guess there are other people doing different things. So to me, a lay person that wasn't on the floor, it feels like quite confusing. So how was it? Once you're there, I guess you work out what's going on, what these hand signals mean.
Yep.
So was it intimidating when you first were taken there by your brother and you loved it? So I'm wondering how you, because I would have been intimidated really because there's so much going on. But tell me about that experience.
Oh my gosh, it was very intimidating. If you go on the exchange floor, you had to be prepared to have your ego atomized when you went down there. It was I use the metaphor of a beehive, right? You and I don't know. I know nothing about bees other than I like honey. So if I looked at a beehive, all the bees going nuts, I would have no idea what I'm looking at, right?
Yeah.
It would just look like chaos to me. But and I believe an apiarist, you can look me up, I believe that's who a bee expert is. They would look at this and they would know exactly what's going on. They would know that this bee's making this little signal over here that's sending this guy over to that bee or to that flower over there and whatnot. And so it's sort of the same thing. And when you started off on the floor, it was very chaotic.
Yeah,
but it's just like a lot of things, the more you were there, the more you just absorbed what was going on. And all of a sudden you started to realize that you were starting to fit into this larger machine. And the first thing I had to do as a clerk was learn the hand signals, just like anything else. It's like if you move to a country, one of the first things you do is you learn the language. And so, for instance, since we're on video, I can just show you, you would count. It says 1, 2, 3, 4, 5, and then this is 6, 7, 8, 9, 0, right? You had different, we used to say, pay price on quantity, sell quantity at price. And what I mean by that is the forehead was tens, the chin was ones. So you'd say, I'm 7 bid for 50.
All right, okay.
Or I will sell
I'm
50.
learning.
I'll sell 50 at 7.
Yeah.
And so, so like I said, it's 1, and then you add 5 to it, and it's 6. And then the thing was, you had different delivery months, because remember, these were futures. You weren't actually trading the physical product.
Okay.
You're actually trading contracts to take delivery of these products, right? And they're proxy contracts. And most people don't realize it, but 99% of futures that trade never go to physical delivery. They're used as placeholders and proxies,
Okay.
So sorry, go ahead.
So I was going to ask, so for me and people listening that aren't familiar with what futures are, I think you have given a brief overview there, but what exactly would a futures trade look like?
A futures contract is an agreement to buy or sell a specific amount of a particular commodity at a specific price at a specific date in the future. So what do I mean by that? So let's say I'll use crude oil, which trade on the New York Exchange, because that's a little bit easier for people to visualize.
Yeah.
And it's in nice round numbers, right?
Yeah.
Crude oil contract is a agreement to buy or sell 1,000 barrels of crude oil. All right. So in theory, if I'm a floor trader and I buy one futures contract on crude oil, and I'll talk about delivery months in a second, I am obligated at some point down the road to pay, let's say I did it for $50 a barrel. I'm obligated to pay $50 a barrel when this contract comes due for 1,000 barrels of oil, regardless of where oil is actually trading. So you can see that you would use that for a hedge, right? So let's say you're a refiner and you need to buy crude oil to crack it into the distillates, heating oil, unleaded gas, all that. You need the raw material. But let's say you don't need 1,000 barrels right now. You're full, but you're going to need it in 6 months from now. Well, what if in 6 months from now, crude oil is not trading $50 a barrel, it's trading $100 a barrel, right? Okay. You have exposure to price fluctuation. So what these products are is I call them placeholders, proxies, whatever you want to call them, hedging instruments, right? So I might be an owner of a refiner and say, I'll buy one contract for crude oil for $50 delivery. And let's say it's deliverable in, let's say it's next month. Let's say it's a March contract. So, and they have the specific date when the March contract comes due. And in theory, if I carry that into expiration, I will then be obligated to take delivery of 1,000 barrels of crude oil for $50 a barrel. Now, of course, if crude oil by then is trading 60 or 70, I did well, right? If crude oil is trading 30 or 40, I didn't do well. Yeah. But the idea is it's to hedge and to lock in, to lock in your cost, right? Okay. Now, on the other hand, if you are someone who I think I got that wrong, actually. I think a refiner would, and anyway, it doesn't matter. If you are a producer of the product, I actually just did that backwards. Just everything I just said, pretend that was for a consumer, not a producer.
Okay.
All right, just like I said, I'm just getting the cobwebs up.
Yeah.
If you're a producer of the product, oh, actually, no, let's scratch that. If you are a crude oil dealer and you're like a Texaco or something like that, and you're going to sell to this refiner, right? Your risk is that the price goes lower by, in 6 months from now, or in a couple. Yeah. So you will sell the contract. So the consumer, the refiner who needs it to create product, will buy it to protect himself from prices going up. The producer, the oil companies, the BP, Amoco, something like that, will sell it because their risk is prices going down, right? And so the question is, well, how do you determine the price? Well, that's where these traders come in, right? Because what we did was we provided liquidity, because this producer and this consumer may not always need to trade at the exact same time, right? So who are you going to trade with? Well, that's where we as commodities traders would step in. We'll say, listen, we will pay this or we will sell this anytime you need, right? We're market makers. So let's just use our example and let's say, okay, if I think crude oil is worth $50 a barrel, I will pay I'll pay $49.95 for it, or I'll sell it to you at $50.05, right? And hopefully somebody's selling it to me on this side and buying it from me on that side. And so our job is we would stand in the middle and we would assume the risk. And for the risk, we would charge you a little bit of a premium, or we would pay a little bit of a discount for that. And hopefully our pricing is correct enough where we would then pocket those profits. And that's really what we're doing. And so what you saw, and that's why you use futures. You use futures really to hedge. Or some people use them to speculate. So that's really what the futures exchanges were. They were places where they provided liquidity, and we assume the risk to ourselves, right? And we still do that now. We just do it over the counter. We just don't do it on the floor anymore. So the mechanism has changed. The actual conduit through which you deal with people has changed. Like right now, I trade with this. I just trade with a mouse, and that's really what happened. Right, and technology
massively.
Yeah, technology. And remember, these exchanges, like some of the earliest exchanges in Chicago, began in 1844. I mean, they began, well before the Civil War started. And they were in their heyday in the 1980s and 1990s, and even into the early 2000s. So they lasted a long time. They were 150, 160-year tradition that was wiped out by electronic trading within 20 years. I mean, it was an astounding sea change. And that's sort of also what the book is about, is how I was very fortunate that I was on the exchange where I saw both its heyday, its pinnacle, but I also saw the beginning of its decline. And to me, it was a very, as a writer, and it's just kind of as an observer of the human condition, which I think a lot of traders are. I think traders are more than just math wonks. I mean, I think traders have a pretty good intuition about people, because markets are really just, when you think about it, markets are really human constructs, right? They're basically the combined amalgam verdict of a million different people all kind of pushing the market one way or the other, And so you have to be able to read human nature. And, and it was just interesting to me to see how it affected people, how some people adapted to it and did quite well, and other people, it basically ruined their careers.
Well, a lot of us don't like change, do we? So when we feel threatened by change, when we've got a system that we've used from day dot, we're comfortable with it. When it changes, we kind of feel uncomfortable, and I guess that's when the resistance kicks in. And I think having that ability to adapt in any walk of life is clearly important. So before we get into the technology shift, just in terms of, I just want to go back to the trading floor, the traditional trading floor that you were part of. When you were doing all the numbers, the hand signals, which I haven't perfected that yet, so I probably need a little bit of extra coaching from you. So when you're agreeing prices or you're speculating on prices, so I guess we have to be exact with that. Was there ever any confusion when the hand signals would go and somebody may have misinterpreted maybe the number that we've suggested?
I actually have a whole chapter dedicated to
brilliant.
an error that I unfortunately witnessed firsthand in our own group. There was because I'll tell you,
obviously everybody should get the book, but if you can maybe whatever you want.
I'll explain it, because for instance, I was saying before, there's different delivery months, right? And each of those months have a code as well, right? So like, for example, when I traded Eurodollars, the delivery months were every quarter. So there was March, June, September, and December, right? So just to show you, like March, this was the symbol for March, marching soldiers, right? And June, the commodities code for June is M. So this was the symbol for June. Let me make a little M, right? the commodity symbol for September is U, so you do a U, and then the commodity symbol for December is Z, Z, so you would do that, right? So what happened was my brother, who was a very good trader, he right before what we called a number, and you made the symbol number like that, which basically means an economic number, an economic release was about to come out, right? Just like retail, like every first Friday of the month, the unemployment figures come out at 7:30 a.m. So that we call that a number, an economic number, right? But we had one that was called retail sales, and the trade my brother didn't matter per se. It's just that he was an options trader, and when you do options trades, you have to hedge them with futures. And I mean, I don't want to get into the weeds of that, but the bottom line was
I need to come over and have a master class from you in New Jersey.
Yeah, exactly. I actually used to teach options.
Okay.
And he had to very quickly do a very large futures trade to lock in his profit against this option trade he had just done right before this retail sales number came out, right? So and what he had to do was he had to flash his order across the Eurodollar pit, which was, I don't know the exact dimensions, but I say in the book, it was the size of a small backyard. It was a very large pit. And he had to talk to somebody way in December, which was a far month out, way in the back. So he had to flash this order to a clerk, who then had to flash it to a broker to fill it, right? So long story short, he said, December, buy 1,800, right? Futures. It's a big order, because each contract, every point you're off is $25, right? So it was a very big order, right? So they took the order, shouted down to the broker, December by 1,800. And then what my brother did was he went checking, meaning I just want to confirm, right? Checking, you are working in December to buy 1,800, right? Well, unfortunately, the clerk looked up again just in time to see December buy 1,800. He thought he was putting in another order for the same
Joking.
Yeah, no. And so he made, and then again in futures, the only reason I'm doing this because I have a video is that so he said all day, which was the terminology we used to use for the entire size of the order, right? So if you sell 50 and you sell 50 all day, you sell 100, right? He put it in an order for 3,600 futures, right? He only needed 1,800 to hedge this options trade. So basically, right before this retail sales number came out, he went in what we called naked long, just like 1,800 futures. That's like taking on 1 million shares of stock right before earnings come out, right? The market collapsed, and it immediately took $1 million, $1,993 or $92, mind you, down with it. So we lost $1 million in about 5 seconds, all due to, and it wasn't even like it wasn't even any negligence or anything like that. The guy just up 5 seconds too late. And that's how quickly money could come and go.
That's interesting. So the level of focus and concentration is next level.
Right. And mind you, you're doing all this while you have literally people screaming in your ear.
How do you absorb anything when you've got people? So that's the bit that confused me, because whenever you see films, like everybody probably listened to this of a certain vintage will remember Trading Places. So that was where we all got our kind of our snippet of trading, but then there's been other programs and films and so forth. But because of the chaos, people with bits of paper in their hands and doing all this and the other, for the uneducated, it's like, how are they communicating? How are you absorbing anything?
So like the way the typical language would go, let's say we're doing crude oil, right? And you walked in, a broker would get an order from Goldman Sachs or something like that. The phone clerk would get an order from, like, let's say Goldman Sachs, buy 1,000 March crude oil futures market. Just do the best you can. Buy me 1,000, right? For whatever reason, he's an energy trader. He's speculating, whatever he's doing, right? So he maybe just did a deal on the other side with a bank or with one of his clients, and he's hedging it. However he did it, right? So the phone clerk would then he would basically wave to another clerk who was standing back to back to the broker, he would say, "Where's the market? Where is it?" Right. And you would say, and everything was done in shorthand, right? So if it was $50 a barrel at $50 and a penny a barrel, you don't go 50 at 50 and a penny. You would just go 01, right? Okay. And you knew what we called the handle was, which 50.0, right? And you look up and you see where it's trading. You're like, okay, so that he means 50 bid at 50 and a penny, right? So So then the guy would say to his broker, hey, March crude by 1,000 best you can, right? So the broker would then face the crew, and we'd be down in the pit like this, looking up at him, right, or her, whoever it was, and we're waiting to see if he has an order and what to do. And he'd go, March crude, go March, right? March, where is it? Meaning what's the price? And so we would probably make it $49.99 at 50.01 if we thought value was 50, right? So we'd immediately go 91, 91, 91, right? And so he'd go, okay, say 100, or buy 100, buy 100, buy 100, buy 100. So, and if he hit me on the finger, he meant that I just sold 100 futures contracts at 50.01. We just did a deal like that. It was that quick, right? And then he'd go to the clerk, hey, you're filled. You bought 1,000 at 50.01. The clerk would then go to the phone clerk, you're filled at 1,000, 1,000 filled. And then the broker would go, and the clerk would go to the guy, you bought 1,000 at 50.01. And the guy would, Guy Goldman would go, okay, thanks so much. And he'd hang down the phone, and now you have a deal. It was done that quickly, right? So then, but meanwhile, a guy over here is like, hey, where's March crude? And we're like, all right, I just sold it at 51, right? So I'll be like, 50 bid at 2, 50 bid at 2, or 02, 50 bid at 50 and 2 cents. And the guy would go, sell you 50, sell you 100, whatever, sell you 100. Now I just bought 50 at 50, right? So now I'm naked short 50 at 01. And what you're doing is every time you're doing it, you're writing your little trades down. And, in the floor of the Chicago Merc, we'd tear up we'd keep a little carbon for ourselves. And then, what would happen is every now and then you'd feel somebody tugging on your pocket, and you look down and it'd be a clerk, and you'd hand them your cards. They would take them to the exchange. They'd type them in. And all this was going nonstop. Now, meanwhile, you're being beaten down. You're being battered. It was so crowded. It was like a subway where you're in like a really crowded subway where you're back. You're not even like side by side, but your back to chest. It was so funny that if we turned sometimes, the ripple would knock somebody off the step like 3 or 4 down. It was an incredible place to do business. It really was, and you'll never see it again. I mean, it was just one of those very unique episodes in capitalism. And there are exchange floors all over the world. I think the Dutch were among the first. I think the Dutch were the first to do it. Obviously, the Life was a big exchange. The London Intercontinental. I think it's the Intercontinental Financial Futures Exchange. That was a big exchange. Well, New York.
Did they have a market? China? Did they have a market?
I don't know. You know what? I know that one of my very good friends went and traded in Hong Kong, so they had a floor as well.
Maybe Hong Kong. Maybe that's what I'm thinking.
Yeah, I don't, but not. I don't believe. I mean, I've been on
Hong Kong's what I'm thinking.
Yeah, I've been on 3 exchanges in my life. I was a trader on the Chicago Merc, right? I don't know if anybody watching this has seen the movie Ferris Bueller's Day Off, but if you have,
a brilliant film.
Yeah, well, where they're looking down into a trading pit.
Yeah.
That was the Eurodollar pit in Chicago Merc. I actually knew those guys. That's exactly where I traded.
Really? That's incredible.
So that's where I was, right? Then I traded in the New York Mercantile Exchange. I trade heating oil and unleaded gas futures and options. And then I even traded in the American Stock Exchange for a while. And each exchange had their own little personality and their own little intensity. The most intense places I've worked, though, were the commodities exchanges. The stock exchanges were more gentlemanly. They were more orderly. They had a specialist system and all that, which they acted as referees and stuff. Whereas the commodities exchanges were just free for alls. They were really wild. And another way, by the way, that who you're dealing with is if you look at an old badge, I had an acronym, right? SCH was my acronym. And then below that was a number which was 135, which was the number of the clearinghouse where my trades were actually processed. So you would write on your little card, you would write the commodities code for what you did. You would write if you bought it, if it was the red side of the card, it was a sale. If it was the blue side of the card, it was a buy. And then you would write down. So if you did a trade with me, let's say your badge was PAL, and let's say you cleared for, I don't know, first options, which was 001 was the clearing, right? So you and I would do a trade, and then what happened is our clerks would then meet up with each other and say, hey, Paul knows buying 100 crude oil from Brad at 50.01, and he would look down and go, yeah, Brad knows selling 100 crude oil to Paul at 50.01. So okay, that trade's checked. That's a good trade.
Okay, so that's checked. So that's confirmed. So
right, that's confirmed. Now, if you knew buying it from me at 50. And I knew selling it to you at 50.01, we had what was called an out trade, right? we'd be like, okay, we got an issue here. Or if you knew buying 200, and I only knew selling you 100, or vice versa, right? So you were always, so after you did every trade, you had clerks running around. In Chicago, they were the guys in the yellow coats, which is, and then we each had our own little colors to differentiate ourselves, the members, right? Some companies had their own company colors. Other guys had very personal, their very personal coats. One of the guys in the cattle pit, of course, had the black and white Holstein patches, of course. There was a guy who had a tie dye. One guy wore all black and his badge was X-ray just to look mean, It was just the way I think I likened it to somebody as a combination of Wall Street and Game of Thrones.
Okay. That's quite a mixture. So so just in terms of deciding what to trade, how did you go about deciding what you would trade on any given day, or were you assigned that?
Well, I mean, not to get too complicated, but what I actually traded options on futures. I didn't just trade. Now, just to tell your audience real quick, a future is an obligation to buy or sell product at a certain place, right? Certain price, a certain amount, certain time in the future. An option takes that checkers game and moves it to chess. Options are a right, but not an obligation to buy these things. So the right, but not the obligation to buy is a call. The right, but not the obligation to sell is a put, right? And so, without getting too into details, the price of the options were very often had their own components to them. There were inputs that went in that spit out a value. It used to be, it was the Black-Scholes model, which is when I was a trader. So what went into pricing an option was how long you had till expiration, was the perceived volatility of the product itself. There was actual it's called Vega. There was a quantified number for the volatility itself. It was how far in or out of the money that this option was. And what I mean by that is, to use crude oil again as our $50 price point for an example, if you buy a $40 call, that's the right to buy crude oil at $40. Not going to get that for free. Someone's going to, you're going to pay for it. So that means that's in the money, right? Because 40 is below 50. If you buy a $60 call, that's out of the money. That means that if it expired right now, it'd be worthless, right? And if it's a $50 call and you're trading $50, that's called at the money. So that would also change the pricing, and all these things went into a model. It was Myron Scholes and Fisher Black created a model in the 70s called the Black-Scholes model, and there have been variations of it since. So you would actually have a big group of, back when I was there, you'd have a big group of sheets, a matrix that said, if crude oil is trading at $50 and somebody's asking for a $55 call, based on what we're inputting right now, that call is worth 10 cents. So I would say I'll buy it for 9, I'll sell it for 11. And you had to trust your model. You had to make sure that your assumptions could be wrong, and money, right? And so really, or a lot of it had to do with your position, right? If you already owned a bunch of crude oil futures, you would naturally bid lower than normal because you don't want to keep accumulating. And you'd be happy to sell it at a little bit of a lower price than anybody else to clear out your inventory. It's a very it's a constant fluid motion. Like when I trade over the counter, I keep track of all the different positions I have, and each one of them affects the value of the other. And it really is. I mean, it really is a fascinating business. It's like playing a great game of chess.
Yeah,
and if you're wrong, if you get mated, you blow out.
Yeah, totally. So, a question I have in my head: tell me about stress and burnout in that arena.
Yeah, well, that was okay. First of all, was the physical, as you can probably deduce from our conversation, the physical stress. First of all, you even set aside the emotional stress. The actual physical effort to trade was as taxing as it looks. I mean, that's seen on Trading Places where Dan Aykroyd and Eddie Murphy go in and they're trading that fictional frozen concentrated orange futures, which was actually the gold exchange on the commodities exchange in New York, by the way. Some guys were there. Some guys who still traded, remember them filming it there and all that.
Okay.
It was literally in a crazy market like that, and there were crazy markets like that. You were literally physically pushing guys, shoving guys. Guys would fall down. And the thing too is that in Eurodollars where I traded, the trading day began at 7:20 in the morning. And, and it went till 2 o'clock in the afternoon. So you're on your feet for hours and hours, right? And where I was on the Chicago market first, you weren't allowed to even sit down, and you weren't allowed to eat on the floor. So you'd have to, you'd quickly take a break and go grab a quick lunch and run back in, maybe grab a sandwich or something like that. But just imagine being on your feet, 8 hours a day and being shoved and pushed. And now on top of that, you've got guys literally this far away from you, and they're screaming at the top of their lungs, right? So just have somebody come into your ear and just scream at the top of his lungs right in time. I don't know if you have children or not, but I remember once my little toddler back in the day, now she's older, but was screamed in my ear one day, and I was like, it was like coming out of a concert, right? And your ears are ringing. And I quickly developed tinnitus.
Yeah, I know that.
And I still have it, and
that's you think that's directly from being on the trading floor?
Oh, I do. Well, also I was in a rock band, but I think it has more to do with the trading floor, because I remember and mind you, I started my time on the floor at 21. And by the time I was 25 or 26, I noticed that when I'd go to bed at night, I'd hear that humming sound in my ear.
Yeah.
It tended to be in my right ear because more guys were to my right than my left. So, and also, like my brother, I think, developed sciatic nerve issues and stuff. And so I always marveled. There were some really old guys on the floor, or they seemed old to me at the time. Who knows? They might be my age, but, and there was one guy who was a Holocaust survivor, actually. He was an old Hungarian man. And I marveled that this guy came onto the floor every day and stood in that options pit, not, without missing a beat. I'm like, I said to him, like, how do you do it? It's like, he actually said, what am I going to do? Stay home and hang out with my wife? I was like, okay.
Do you think there was an element for some that they needed that adrenaline? Because it feels like when you went going into a lime pit, well, no, I guess who wants to go into a lime pit, but it feels like there was a magnetic energy that potentially existed for some of your colleagues, and to do anything else, you will never get that type of buzz and
absolutely. The adrenaline rush was part of the appeal for a lot of people. There were not many type B personalities down there.
Yeah.
It was one of these places. I mean, I speak about it fondly because I don't think I felt very lucky that I was surrounded by some of the sharpest people I've ever known. And many of them had no degrees at all. Like I said, one guy was a high school dropout, not that I care, but not only were these guys very fast with numbers, they were very sharp. Some of these guys were doing lightning algebra in their head, especially guys who some guys traded without even needing pricing sheets. They were just able to do the calculations in their head, instantaneously. I would need that. I'd need a calculator or something. Yeah, it was also the different products.
You have the calculator doing all that.
Yeah, exactly. And, but I think what kind of bonded us all is that we got off on the vibe. We really did. I mean, it was, where else do you go to work where at 7:20 in the morning, you're surrounded by a bunch of 20 and 30 somethings for the most part, a couple, older people, but it was a young man's game. And I say man, but there were women who traded there too. Some of them did quite well. So, but I just say man I don't want to keep saying his or her all the time.
Yeah, no, I get it.
Just assume I mean everybody. Yeah. And they were, and that was the one thing that we love. But where do you go where in the morning, your first day, your day starts off with ding, the bell goes off and all hell breaks loose. Like the shouting that
was it really like that? So as soon as the bell went off, then it was chaos.
I likened it to the time when everybody would sit there and you'd watch the analog clock go 7:19, 01, 02, 03, and as it got closer and closer to 7:20, the crescendo would rise, the noise would rise, and you could actually feel the energy. Like if people could actually exude physical energy, you could actually feel it, and it almost flowed through. It was like the force; it almost flowed through you, and then. The moment you started trading, it was like I likened it to that first hit in American football when you kick off the ball. I was always like, as a football player, I was always nervous, as we were waiting to kick off. And then the moment I got that first hit, all the adrenaline went away. I guess comments like that as well.
So just in terms of wins and losses, and also I can imagine on certain days you might have had a colleague that's done incredibly well and a colleague that's done incredibly bad. What was that like in terms of the energy? Would you, if somebody hadn't had a good day, would you not want to maybe rub it in their face that you've had a great day. I imagine there must have been loads of different dynamics going on any given day.
It was hard to tell who was doing well and who
Oh,
wasn't.
really?
The good guys had poker faces.
Okay.
You'd never know that they were
Okay.
making or losing a ton of money. Actually, I think the greatest trader I've ever personally known is an energy trader named John Arnold. And now he was an over-the-counter trader. He wasn't on the floor. But one of the things that I admired about him, I brokered for him for a while, was that, and he was young too, and we were all young, but he was like a relatively young guy. I think at one point he might have been the youngest member of the Forbes 400. I'm not sure, but he was a trader for Enron. Then he started his own fund. And the one thing I always admired about him was his emotion never changed.
Yeah.
He could be down, the money he was throwing, right? He could be down like 500 million, or he could be up 50 million, and you'd never know.
Crazy.
Well, and that's part of the discipline of trading. And that's why I try to tell people is that you need to separate there's a difference between being screaming and yelling and being physically emotive and being emotional.
Yeah.
If you didn't get a good trade, you'd scream at the broker, "Hey, you're a thief," blah, blah, blah. I mean, guys yelled and insulted each other. But like when we had that big error, everybody knew. I mean, it's kind of a funny story. When my brother was older than me, he and I went to the Merc Club, which was a bar right along the Chicago River, just to kind of clear our heads, after everything, the day after. And this bartender said to us, "You guys had a bad day?" We're like, "Yeah, we're having a bad week." She goes, "Well, it could be worse. I heard some guys lost $1 million on a clerk error yesterday." We're like, "Well, that was us."
Okay.
She felt terrible, So obviously something like that people know about.
Yeah. And just in relation to kind of up being on the floor, and I guess you've alluded to it when you have those difficult days, your psychology has to be, I guess, on point, and I guess you have to know how to handle the ups and the downs.
Yep. Well, you have to understand that in trading, even the best traders have a lot of losers along the way. And so that's where really the key to long-term survival in trading is. It's discipline, and what I mean by that is, and this is the cliche of trading, and this is sort of the first commandment of trading, but it is cut your losses early, let your winners ride. I know I believe Richard Dennis was one of the great traders. Like, he turned $400 into millions. He actually said that, I believe it was Richard Dennis. He said that he made 90% of his money on 10% of his trades, which, I have a lot of losing trades throughout the course of when I'm trading. And, and I put up pretty good returns, knock on wood. Right. And the reason is what my boss, who was one of the best traders, I was very fortunate to learn from one of the best traders who I think I've ever seen. And he always said to me, he said, "Brad," he goes, "I'm not a great trader, but I'm a great puker." And what he meant by that was, he doesn't always get it right, but he knows immediately if he's wrong, and he gets out of him. He doesn't try to double up to even up, and so many people, there's a little bit of advice out there, and this comes from a book called Reminiscences of a Stock Operator, which is 100 years old and still I consider the best book on trading ever. And the guy says that the biggest problem with trading is psychological, and that is how to juxtapose hope and fear. And what he means by that is, if you have a losing trade, most people will hang on to them, hoping that the market will turn around, right? If you have a winning trade, most people will get out of them too soon because they fear they're going to lose their profits. What you have to do, and this is really counterintuitive to, I think, the way most people are hardwired, you have to reverse that and say, I hope this winner makes more money, keeps making money, and I fear this loser is going to get worse. So, if you have two trades, one's a winning trade, one's a losing trade, and you need to raise some money, most people's instinct is to sell the winning trade, take the profit, right? No, get out of the losing trade, because that's the one that's going against you. That's where you're wrong. Stick with the one that you're right. And that sounds simple, but Paul, you'd be surprised how long it took me to almost, I had to rewire.
Yeah.
And I think one of the skills I have as a trader, and I've learned it over many, many black eyes and many, many mistakes, is the ability that a loss never bothers me, because it's part of the game. That would be like the equivalent of, to use an American football analogy, that would be the equivalent of a coach getting upset because every trade isn't a touchdown, or every trade isn't a completed pass or something, or I mean, every play isn't a completed pass, or if somebody never took a shot on goal in, soccer or football, because not all of them go in the goal. I mean, how many shots on goal are there? Right.
A lot.
Right. Or, I think,
You don't score them all, do you? Don't score them all.
I forget who the basketball player was. He said, you know what?
Michael Jordan.
Was it Michael Jordan? You said you miss 100% of the shots you never take?
Yeah. So was it 9,000 shots that he's missed?
Yeah.
Amount, and
so the key
what made him a great player, because he would go again, show up.
Yep. And that's the key, is that you have to know how to manage your risk. And the way you start managing your risk is you psychologically tell yourself, listen, I had a bad day. It happens. That day's over, right? Yesterday's history, tomorrow's a mystery.
And is that something? So what you just said, which is wonderful advice, and what I love about that, I think we can use that analogy for every sphere of our lives. Mm-hmm. But the psychology bit, and where we're able to kind of have a sense of perspective and bounce back if you've had a bad day, was that something that you guys developed individually, or was it something where you were guided by your team or your colleagues, or was it a blend of everything?
Well, I was, it's like most things, most professions, you learn from the old salts.
Yeah.
The guys who've been there before. And and I guess I'm an old salt now in that respect. And I remember there was a great trader. I found out he passed away recently, but he was an old, I loved the old salt traders, the guys who'd been there for like 10, 15 years, because they were a gold mine of great advice, and I always sidled up to them and I would ask them advice. And I remember one time, I missed my futures trade, right? I did an options trade and I wanted to sell, I wanted to sell threes and I got twos or ones. I missed it, whatever it was, right? Now I was bitching and moaning. I'm like, this is BS. This is not fair. And the guy says, Brad, you really should complain, because that's the first time that's ever happened down here.
Really? Wow.
What he's basically telling me was, look,
quickly.
Yeah, you're going to deal with it. You have to deal with adversity in the business, and that's really, But like you said, that's really anything in life. You have to be able to. And some guys, not everybody was psychologically cut out for that. I think most people aren't. And one mistake I noticed that a lot of guys made, and I really try not to, and it's very tempting, is, let's say you lose $5,000 during the day, right? Or just pull a number out of the blue, right? You can never say to yourself, oh man, I could have taken my wife for a nice little, weekend vacation to, Bahamas with that. Damn, you can't do that. You have to look at it because you'll be paralyzed to ever take a risk, right? Because, you have to look at it as numbers. You have to look at it as a scorecard. And that's really the way, like right now, to be honest with you, like I have a trade on right now. I was watching, it's a losing trade right now. But I know where I'm going to get it. Oh, also another thing too is whenever you put a trade on, know where you're going to get out immediately. Always know where you're going to. And
No, carry on.
And no, I'm just saying, and so I'm looking at it, and I'm annoyed that I'm losing money on it right now, but I'm not concerned because I already know where I'm going to get out, and when it gets there, I'll get out, and I'll have the discipline to get out and not look at it again. Not try to make it back, or anything like that. You have to. You can't force the market. One guy used to say, the market never goes against you, you go against the market. And all these seem like almost like trading 101 cliches, but you would be amazed how many years it took me to, like I said, rewire myself to learn that. And I think I'm you're never fully there. You're always mistakes. You don't always repeat mistakes, but mistakes never repeat themselves really, but they have an infinite number of cousins and uncles.
I love that analogy.
It's from Reminiscences of a Stock Operators. That's Edwin Lefevre. I can't take credit for that, but I wish that's
a great analogy.
Yeah.
So the industry shifted. So from I'm going to get into your book in a second, but the industry shifted. It came from the physical, where we're there in person, backs, and we're almost touching, or not almost even touching. Then it sort of shifted. But when did you start to see that shift from maybe the floors to maybe something more online?
Well, it was interesting. Like the first trade was 1992. The first the first electronic trade on what was called the Globex platform. which was designed by the Chicago Merc to be point and click, that I believe that first trade was 1992, and but it started to metastasize very quickly because a lot of people like right now I'm looking at a screen here and I can see the bid ask on a lot of different products. I know exactly where they are, where they're valued, right?
Yeah.
If I want to buy it, I'll just slide my mouse over here and click and I'll buy it, right? They did the technology. This was always the more efficient way to do it. Just the technology hadn't caught up to it yet, but as you know, Moore's law, right? Exponentially, I think it's every 2 years, computing power doubles. I don't know the exact formula, but you saw that happen very quickly. And you've seen the change in technology from 1990 to now. I mean, it's like if you went back to history 300 years ago, let's say you go back to the year, or longer even, let's go back to the year 1310 in Great Britain, right? And you're riding around and you're on your horse and, buggies and, people were, candles and everything. And then you went into a time machine, came into the year 1605 or whatever. Not much would have changed technologically. Really? I mean, maybe, certain dress codes may have changed and stuff, but the core technology was still horse-drawn, was still candlelight, But go between like 1850 London and 1950, and it's like a different world. And the same thing happened with the trading floor, and I left the floor to go broker over the counter in 1996. And but I would every now and then visit the trading floors, say hi to people and just, because at one time my office was in the building above it, so you'd be able to go down. And then what you started to see was like in options, for example, there were no longer those paper sheets, those paper trading matrices I described. Then people had these little tablets with the stylus.
Yeah, I think I've seen them.
What they were doing was slowly metastasizing into the over the counter. They were being absorbed into the over the counter world. And then then trading floors began to actually physically shut down around in like the 2010s to like 2017. There are still one or two pits that remain on the Chicago Board Options Exchange, which is yet another exchange. But the big pits that people think about, and when you think the trading places world, which again, like I said, was accurate. That was not hyperbole. That was not Hollywood hyperbole. That's the way it was in what we called a fast market. They slowly went away, and they finally. And I was, and what kind of prompted my book was I wrote an article in the Wall Street Journal in 2016 called "I'll Miss the Trading Floor." And one of the reasons I wrote it was I felt now the time was suitable to write the epitaph. Yeah. Like that chapter had closed. And, but, trading futures, trading options, trading derivatives, that, it's still alive and well and probably even more pervasive than ever. It's just those days are gone. And like we had discussed before we came on, some guys really had a hard time adapting to it. Some guys couldn't because this was all they knew. All they knew was Frank over here is going to sell me something at 19 and Billy Bob over here is going to buy it to me at 20. And later we'll go out for drinks and, hey, appreciate, I'll make it up to you guys, whatever. Yeah. That whole way of doing business is gone. You have to be more analytical now. And I think what has happened is it's closed the door to the state schoolers like me. Like if I came out of University of Illinois today, knowing what I did back then, I would have no path into Wall Street whatsoever. I wouldn't be.
So if people that come from Illinois University or similar universities don't have a path, who does have that path?
Oh, well, I think yeah, I mean, I think a lot of the higher ed, a lot of the technically advanced higher education schools. So like, for instance, I think, and mind you, I've never really worked at a hedge fund or an investment bank, but based on the guys that I've done business with, they're usually top tier colleges. They're usually STEM degree guys. Some of them have some advanced degrees in computer technology, or high finance. Excuse me. And so it's the business has changed from just buying ones, selling twos to stepping back and doing more. And there's much more much more sophisticated modeling now.
Yeah.
Also, there's algorithms that have now taken over. So a lot of the trades I do, I can see, like I'll put in a price sometimes and the price will automatically jump in front of me. And I'll see that that's an algorithm kicking in. Somebody has developed an algorithm that probably said, bid the highest price in this particular product up to X number.
Yeah.
So you see a lot, and the velocity of money has increased so much too, has gone so much faster now. I mean, I don't know if anybody's read the book Flash Boys by Michael Lewis, but it's basically about guys who developed, who developed fiber optic networks that by a nanosecond are jumping in front of other deals, and so it's become much more integrated into technology.
Okay.
And a lot of guys grew up in the pre-computer age. See, I'm young enough where I grew up with computers. I did, I remember the world before them, but they didn't come too late in my life that they scared me away. If anything,
so you caught computers, so you're able to kind of have some familiarity with what.
Yeah, now mind you, I can't code or anything. I can't code or anything like that, but they don't intimidate me, and a lot of the guys who were older they just couldn't handle it. They literally, a lot of these guys are out of the business now completely.
What happened to those trading floors that existed? Are they still physically there, or are they being used for different things?
That's a good part. That's one thing I'm not really sure about. Because I ended with them closing. I believe they're big empty spaces right now.
Yeah.
Or they're probably going to or in the process of maybe subdividing those spaces into offices or into. I mean, they were enormous floors. I mean, they were like gigantic hangars. I mean, it was really wild. I mean, it was and with huge high ceilings, and it's like if anybody's walked into an airplane hangar, or like if anybody's been to Oktoberfest and you go to one of those big beer tents, that's what it was like, And so I don't know what they're doing. I don't know what the Merck is doing with their properties. I'm assuming that they're smarter guys than me, so I'm sure they've got it figured out.
So something that's come to mind, which I think would be quite, to me, it sounds fun. Whether it does to you, I'm not sure. But to do like every year for one day a year, whoever's around, whoever's interested, for the old school that were part of those trading floors, have one day where you just kind of like revert back to type.
I would love that. That would be wild. But it was funny because when we were training as clerks, and one of the things we did was what we called mock trading.
Okay.
Which was, which was you would get after hours, all the clerks who were trying to learn how to trade would get onto the trading floor, and then a couple of Merck officials and a couple of senior traders would pretend to be brokers, and we would pretend to trade with each other. And so you could do something like, and that was part of the training, was learning how to, kind of like running drills in football.
Yeah, that'd be fun. So that'd be
great.
Yeah, no, that sounds fun. That sounds fun, and I think you'd get a lot of nostalgic.
Oh yeah, I'd love to see it. Well, the book is going to be coming out on Audible, and I think they're trying to make it. They're trying to sell it movie rights. I don't know if it's going to happen, but if they did, that'd be kind of interesting to see them recreate it.
Oh, I'd love that.
It's like all those guys in Trading Places on the Gold Pit.
Yeah.
The frozen concentrated orange. They were all real traders.
Really, I had no idea.
Yeah, they weren't actors. The only actor, from what I understand, I mean, if anybody watching this, wishes
Eddie Murphy's watching, or Dan Aykroyd.
Other than Aykroyd and Eddie Murphy, but those guys were all traders, and so they probably just threw them in there and said, okay, just here's what's going to happen. Winthorpe and Valentine are going to come in and trade, crude, orange juice futures, and you're going to pretend to trade with them.
It kind of makes sense to have people there that know what they're doing, because then it's authentic. You can't get any more authentic than that.
Yeah, I mean, so anybody listening to this who's actually seen Trading Places, that was, I keep saying, that really wasn't hyperbole. That's the way it actually was.
If anybody's watching that hasn't, or listening that hasn't watched that film, then definitely you're in for a treat. It definitely should be a film that you check out.
Yeah, I cite that book several times that movie several times in my book, because that movie is to commodities traders what like Caddyshack is to golfers, or this is Spinal Tap is to rock and roll musicians. That's sort of this common cultural experience that we share. And the floors were interesting. They united all different kinds of people.
Yeah,
we all had one goal. And another thing that I liked about it was there was no pretense there. It didn't matter what your degree was. It didn't matter if your boss liked you, or if you're a good golfer, or anything like that. All that mattered was, does this guy or girl know how to make money? If so, they're a good trader. Do they know how? Do they lose money? They're a bad trader. It's that. Yeah, but this guy went to MIT and he went to Wharton, and this guy over here just was the shoe shine guy down the street. So what? This guy's making money. This guy isn't. No one cared about anything like that. And I think that's one of the things that attracted me to it. I felt it was a very honest place to do business.
No, it sounds tough. but it sounds authentic. It sounds very real.
Authentic. That's actually I should have used that. I'm stealing that.
You'll definitely steal that because
I'm
I
stealing it.
get from listening to you and
Mm.
capturing real insights into what that world was like.
Yeah.
So the book,
Hmm.
what the book for you, was it like a trip down memory lane? Were there
It
things
was.
that potentially you'd forgotten that came back to you? What was that process like putting the book together?
Well, what started me writing it was, okay, first of all, like I said, I'd written an article in the Wall Street Journal,
Yeah,
and I thought to myself, and my agent had said this too, because this is my third book, right? And I said to I was like, there's some great stories here. I should probably put them down. And so I originally started writing it as a memoir, just really for my kids,
yeah,
just and for anybody who might have interest. I was going to maybe write a series of articles for Daily Wire about it or something like that. And after a while, I was like, I've got a good book in here. And so what I would do is I actually went on Facebook and LinkedIn. Excuse me, it's cold out here.
yes. It's freezing where I am today.
Yeah.
Actually, we kind of mentioned it.
I went on Facebook and LinkedIn, and a lot of traders were really, really cooperative because I had forgotten a lot. I was like, "Do any of you have your old trading cards?" So I wanted to make sure I got the dimensions right.
Yeah,
I said, "You guys remember any fun stories or anything like that?" And I was inundated with them, but I wanted to keep the book a short, quick, sweet read. I didn't want to be a tome, I didn't want to, and so some of them provided some stories, but every one I wanted to authenticate. I wanted to, is that the word, authenticate, or confirm, right? And so most of these stories either happened directly to me, or I watched happen, right? Or I knew to be legitimate stories, and so there's everything from the goofy, like the little pranks we used to play on each other, because what people don't realize too, though, is, again, using that trading places analogy, that's what was called a crazy fast market. But there were a lot of times when you just sat around and did nothing.
Okay,
Because it wasn't.
Don't
We
see
used
that.
we used to sing the REM song, "Stand in the Place Where You Work," right? Because we'd be bored. And so what would happen is guys would be gambling, guys would be playing jokes on each other and stuff like that. So I wanted to capture that little kind of funny.
Yeah, we don't see that, and we don't know about that.
Yeah, a little cultural minutia, but also there are some pretty good stories in there too, and some pretty, like watching the Gulf War. I was a clerk watching it. The New York Post actually posted a pretty long segment of the book on it, but they said that I made a fortune trading in the Gulf War. I was, they got that wrong. I was actually a clerk at that time.
Yeah.
And but all the stuff I watched and all these things, and I thought it was very. And it also got me thinking about, just the power of money and the both good and the bad corrosive influences. The book has some philosophy to it. It's not just about the floor itself, but
I'm interested in that. So,
and you learned how some guys couldn't handle the instant money and free, because you had a lot of free time back when I started, before all this over the counter trading was. At 2:00, trading was done, and you weren't going to do anything till 7:20 again, even if you had a position or something.
Can I just pause you there? So if trading's finished at 2-ish.
No, 2 on the spot, not 2-ish.
Okay, 2 p.m. on the spot. So would you stay around until 7 p.m. ish?
No, I was usually at the Chicago Health Club by 4, and we were at the bar.
Okay.
Right, and especially if it was a Thursday, we would just go straight out to the bars, and unless Friday had a big number that came up. And what the interesting thing is that you could really see how, for me too, it was fascinating to see how quick wealth, and it was quick wealth for a lot of people, affected them. Like I've seen some guys who were born again Christians, and they never succumbed to the corrosive influence, and they took their winnings and they did wonderful things with it, charities and, missions across the country and across the world. I still keep in touch with some of those guys.
There was a lot of wealth creation there then.
Oh my gosh. One of my favorite stories, but just I'll finish my last point first, is that and other guys got caught up in the rock and roll lifestyle. I hate to say it, but cocaine was everywhere on the floor. And I think part of that was people needed to stay sharp, and they, and they needed to, they wanted to, I didn't need that. I was very fortunate about that. I really didn't need it. But some guys, I think, just did it to stay awake and to stay, motivated. And of course, what happens is they very quickly I watched so many guys become addicts that I stayed away from that. Yeah. Yeah. I knew one guy who went from being a multimillionaire to living in an unheated apartment in Chicago in the dead of winter, living in a closet, I mean, and
he's a multi-millionaire.
went from being, and remember when I say millionaire, today it doesn't carry the cachet it used to, but remember, this is $1990.
That's a lot more.
This is when senior executives at major firms were making $80,000 a year, but
it's unbelievable wealth creation that you could generate by doing a job.
One of my favorite little personal anecdotes is I got a sense of it, of how much money, I was down there and I was like, wow, these, when I was a clerk, watching these young guys making money and stuff, I'm like, and some of these guys, they kind of just dressed like in ratty khakis, and the dress code was very informal. You had to wear a tie, but usually it was like a loosened up tie wrapping the Salvation.
Imagine on the floor by the end of the day.
Right, you had to throw it around you grabbed it and threw it around your neck, and it's kind of like in the old days when you had to put on a powdered wig to speak. And but one guy, I said to him, I said, hey Bruce, I said, do you have a change for 100? He looked at me and he said, my nickname was Little Shafe. He looked at me and said, Little Shafe, that is change.
That's when totally different world. Totally different world.
It really was. It was money came and went very quickly.
Yeah. So just in relation to the book, for people that are listening or watching, I think you're definitely going to get the book. But for people that may be outside of the trading arena, people like me and others, are there life lessons in there as well? Were there life lessons that you guys learned along the way that stood you in good stead, not just for trading, but for other areas of your life?
Absolutely. Yeah, absolutely. I mean, in fact, because remember, like I started writing it for my kids. So a lot of it was, I mean, an alternate title could have been How I Learned About Life on the Trading, and I tell you, I didn't, it's interesting too, Paul, because you do a reflection.
Yeah.
And you start to realize, my boss used to say I was learning through osmosis. That's really how you learned down there. You were thrown into the deep end, and either you picked it up and you were good, or you were flushed out. And one of the life lessons I learned was the world doesn't owe me a living. I don't. It wipes out your entitlement, your sense of entitlement, very quickly. Also, is that the key? It teaches you how to prioritize. It taught me how to what's the word I'm looking for? How to get how to get back up after being knocked down.
Have that resilience. Have that resilience.
Absolutely, and it also it taught me that that don't underestimate discipline in life.
Yeah,
because it's in self-discipline, and I mean, literally, you cannot be a successful trader without having discipline. I don't care how smart you are. I don't care how much of your model is better than somebody else's. It really kind of boils down to your ability to control yourself and to control your greed and to control your hubris. I got fired from my job at one point because of, and I describe it in the book, because of my own hubris. I put a trade on and I was right, but I defied my boss, and I traded far too large for my account size. Basically my head got to the point where I couldn't get it through the door. I mean, there's a line from Amadeus I love where Salieri goes, "Everybody liked me because I liked myself." That's so it kept my ego in check too, and so just but it also life is it taught me that things can come and go very quickly. So appreciate the moment.
Yeah. No, I agree. That makes
but there's a lot of I didn't write this just for traders. Trading is the vehicle through which I explain certain things that I personally have learned. Not that I'm any sage or anything like that, but so basically mine is, look, for what it's worth, here's what I've learned about life.
And to me, I think I alluded to at the start, I think this is for many people that aren't from that arena, particularly people that are aware of trading that you guys were doing in the 80s and 90s, and maybe 80s and 90s particularly. That there's definitely this mystique about it. What was going on? We want to know what was going on.
Yeah.
But invariably, a lot of us never knew anybody in that field.
Right, right.
Because I've learned a lot just from listening to you, some of the things that you told me, how you communicated,
Right.
futures, options, commodities. So there's a lot of stuff here that you hear these words, but you kind of don't understand what they mean.
Yeah, yeah. No, I mean, it's like anything, it's because it is a bit a work of history as well, right? And so you don't have to, like, I mean, I'm interested in World War II, but I never fought at Okinawa, but I'm interested in World War II, and I'm interested in astronomy, even though I'm not an astronomer. And you can, and because it teaches you,
100%, yeah.
and so yeah, so this book you don't have, but the thing is though, most people are involved in the markets now in some way or another, either through their 401k, or a lot of them have, remember, retail trading, TD Ameritrade, Schwab, all that. So I think a lot of people listening who, if they dabble in the market, stock market, whatever, the psychology of markets never change, right? They're the same now as they've always been. The reason why I mentioned the book Reminiscences of a Stock Operator by Edwin Lefevre, it's 100 years old, which I kind of like the fact that my book came out 100 years to the year after that book did.
Really? Amazing.
The premise is there's nothing new on Wall Street. And what he means by that is there's nothing new about people, and people make up markets. And you might go from being screaming and yelling in a mosh pit to point and click, but right now I'm looking at markets and I can still see verdicts of thousands of people reflecting itself on the screen. Markets are in the end human constructs. So if the study of markets is the study of people to me.
Yeah.
And so the more you learn about markets, the more you learn about people. And I think you can carry that into any aspect of your life.
Absolutely. So can I ask you about, and I see a lot of these adverts on YouTube, you probably know where I'm going with this, with the online trading, where people are talking to you about how you can get an online account trading. And I guess this is, well, I'm not sure actually, I guess this is my question. So what people are doing online now, where you get hit with adverts on YouTube, on particularly YouTube, is that kind of like replaced what you guys were doing?
Well, usually the people who trade online are trading equities, usually, or like what do they call them?
Index funds and
index funds and stuff like that. Yeah. And what they've actually eaten into is the classic stockbroker, a broker who, right? Traders take principal risk on their own accounts. Brokers execute orders for others, right? And they collect a commission. That's how they. So remember, in the 60s, it used to be, I want to buy myself some IBM. I'm going to call Jack, my broker over at Morgan Stanley, and he'll, hey, Brad, I'll buy you.
Yeah.
Now it's just like, click. Oh, there's Morgan Stanley trading. Click. I'll buy it on TD Ameritrade or something like that. And so that's kind of cut out that middleman a lot. Really, but when it comes to trading commodities, part of the reason why it's still very much a professional game as opposed to a retail game has to do with leverage. Like if you want to buy $100 stock, you want to buy one share. Usually you need 50% margin, meaning you need $50 in your account.
Yeah.
And the clearinghouse clearing firm will kind of put you the rest. You can trade commodities on like 1 to 10 margin, 10%. So if you use that crude oil for an example, right? You buy a crude oil future for $50, that for a barrel, that's $50,000, right? But you might only need $5,000 in your account. So the P&L or the returns are much more outsized with commodities trading, which means there's a lot more risk.
Yeah.
People don't, the one thing that I learned about commodities trading was how quickly money can just go. I mean, not just within a clerk error, just if you put a trade in, and that's where you learn discipline, where people buy. And also another thing too about stocks that's different is that, and it's interesting to talk to people who don't know about futures very much, because when you think about it, a share of a stock, right, an equity, it's a share in a company, right? So if I buy a share of Apple, right, I want, Tim Cook to keep doing well, right? He's got managers, he's got developers and stuff that are trying to increase the value of this company all the time. We're on the same page. When you buy a stock, equity markets tend to have a bullish bias to them, right? Because they're investments. Like Warren Buffett used to say, says, I don't buy stock, I buy companies. It just does it through their stocks, right? Whereas commodities are not directionally biased, right? Crude oil can go to $120 a barrel. It can go down to $15 a barrel. It's all about supply and demand, right? So there's no, so, so I used to come home. I briefly traded oil for Texaco, and I'd come home and a guy would say, my neighbor would say, hey, I see oil was up. You had a good day, huh? Be like, actually, I was short it and I didn't have a good day, And they'd be like, how can you sell something you don't own? And that's when you get into, well, it's an agreement. I'm not actually physically moving the oil, right? And I think it's not that it's beyond the comprehension of a lot of people. It's just that people have other things in their lives that they're good at and that they focus on. Just like I'm sure the law is, like my brother's an attorney, he's been doing it for 40 years. I'm sure many of the stuff that would bewilder me in the law is second nature to him.
That kind of makes sense, doesn't it?
Whereas I it doesn't bother me when the public trades in stocks so much, because they have everybody trying to, if they go, unless they're a rogue short seller, which is it's also much harder to short stocks than to short futures, right? Futures you can buy or sell with an equal, you don't, whereas stock you have to borrow the shares and then sell them, and then you got, it's a much more dangerous operation, right? But remember, and everybody's trying to get the markets to go up, right? You buy it, so most people are coming from the buy side. So I don't mind that, because I think buying stocks is an investment in the U.S. I just know about the U.S. is the U.S. economy, and I think that's a good bet.
Yeah.
So stay away from commodities if you're not. We used to call them the widows and orphans. They would come in and try and buy and sell a future, and they just get decapitated. Just don't do it. There's other ways to make money.
Yeah, absolutely. And I guess that when there's money involved, we really need to know what we're doing. You guys were professionals, did it for years and years and years. I guess you've got the scars as well, so you kind of know what a good day looks like, what a bad day looks like. But to your point earlier, with those scars, you get resilience, you get know-how, you get expertise, which means that you're able to do this stuff and actually be successful at it. And I guess if you're a layperson like me and many others, particularly those, us, when we're not targeted, but we're given the opportunity to maybe look at getting involved more directly with trading online. It's important that we know what we're doing, like stocks. Maybe look at stocks, don't look at commodities and so forth, where the risk ratio can be quite dangerous, particularly when we don't know what we're doing.
Right. And you see people speculating in stocks as opposed to you should approach the stock market as an investment, not as a speculative tool. Because you saw a lot of people during COVID were buying like Zoom and stuff like that. And I remember thinking to myself, this sounds like the classic, when trading, we call it buy the rumor, sell the fact, which means, like it just happened in natural gas recently. Natural gas has come off like an enormous percent compared to where it was trading just a couple weeks ago. And that's because there were cold fronts coming in and people thought, okay, this is, it's going to eat into supply because everybody's going to need natural gas because it's going to be cold. And now, of course, new weather is coming out and it's collapsed because it's going to get warm again. That's the type, unless you're on a trading desk, just stick with equities and don't try to, don't try to day trade, just buy and hold.
What do you mean by that, day trade?
Oh, you buy something at, you buy, I don't know, like XYZ company stock for $5.80 a share, and you sell it out at $5.85. And then you buy something else at $3.25 and sell it at $3.27 or whatever. You do that all day long. You just kind of like make little
gains.
And you go home with no position. You're not long or.
So what should we be doing alternatively?
Buying companies you like, just look and just research. And it's most people will spend more time researching a new car than they will put tens of thousands of their money into a stock because their buddy said, hey, my broker said this is a good buy. Also, if you're talking to a stockbroker, they don't know much more than you do, so be careful.
Okay. So important lessons there and advice. So book, where can people find you, and where can people find a book?
Yeah, you can find the book on Amazon. Just go on Life in the Pits, My Time as a Trader on the Rough and Tumble Exchange Floors. It's on, we put it out in paperback to make it affordable and to make more portable. It's a short book. It's only, it's like 150 pages. You can read it once a day. I didn't want to write a tome. just wanted to write a little quick book. You can get it on Kindle as well. It's coming out in Audible. And me, you can find me, I'm on Facebook. And if you type in Brad Schaeffer, though, make sure you type in Brad Schaeffer author, because there's a Brad Schaeffer who's a podiatrist.
I found him. When I was researching, I found him.
He spells his name the same way as me. And, my name is not the more common spelling of Schaeffer, right? It's a German name for Stewart. And whereas most of it's Schafer or whatever. And he's in New Jersey. So, and apparently
Jersey as well.
Yeah, and he was on some reality shows.
Okay.
So, seems like a pretty cool guy, actually.
Yeah, no, yeah, he does.
So you got to type in Brad Schaeffer author. It's funny, to this day, every now and then I'll field an email for him about like a corn or a bunion.
Yeah.
Wrong guy.
Yeah, and he's probably getting emails about trading as well.
Let's hope. Good. Let's get him
around.
Hopefully he gets a taste of my medicine. Brad Schaeffer author is my website, and I'm on Facebook. I'm on LinkedIn. And, I don't mind, if you want to message me on Facebook, I'm happy to talk. And like I said, you can find my stuff on the Wall Street Journal, the New York Post, New York Daily News, the National Review, the Federalist, the Hill, Daily Wire.
Everywhere. You're everywhere.
Yeah, I have a lot of stuff on Daily Wire, Zero Hedge for those in the financial business. So you can find my stuff out there.
Okay, lovely. Well, we'll put everything on the show notes. Anything additionally you want to send me, please do that. As I said before we hit the record button, I was excited to meet you, excited to learn a lot more about trading than I did prior to connecting with you. So thank you for sharing all that. And
I love talking.
No, wonderful. So we've got a recurring question, which is, if you could invite 3 inspirational people for dinner, they could be live or past, or just people that you're keen to have dinner with, who might you invite? So I'm keen to hear your answer.
Right. Well, I'm not going to lie. I was given a heads up about the question, so fortunately, I was given some time to think about it. 3 of my favorite people, and that I think I would want to have dinner with. I have 1,000 favorite people out there. But like I said to you before, Beethoven is my favorite composer, but I don't know if I'd want to hang out with him.
Yeah.
Plus, he wouldn't hear me. But I don't know sign language. But so number 1 would in no order. I guess order of time would be Themistocles, the great Greek statesman who basically rallied the Greeks in 480 BC, who he was really everybody talks about King Leonidas of Sparta during the Persian Wars. But Themistocles of Athens was really the guy who saw the threat to Persia from Persia, and he was the guy who as Xerxes was readying his army to cross the Hellespont and invade Greece, was the guy who got all these warring states. People don't remember, but the Greeks were always fighting each other. They didn't like each other. The Peloponnesian War between Athens and Sparta is one of the most brutal civil wars in history, right? But that was later. And he was the guy who organized the Greeks and basically saved Western civilization. He really did. He was, and his personality must have been so just so effective, and just so deep. And there's a word I'm looking for, I can't think of it, but so he would have been a really interesting guy. And also the interesting thing about him is after he won the war, the Persian War, he was the one who convinced them to take the Athenians had discovered silver, and he convinced the Athenians to take all that money and build a navy.
Okay.
That was really was the Battle of Salamis. That really and what most people don't know is that while the King Leonidas and his 300 Spartans and the thousands that he was leading, right? There were more than 300. The 300 was like the SEAL Team 6 of this Greek group. It's about 8,000, between 5,000 and 8,000 Greeks at Thermopylae. While he was fighting that, the reason why Xerxes couldn't land behind him was because the Battle of Artemisia was going on at sea, and that was between Themistocles and the Persian Navy. So this guy basically he saw the threat, and then he was driven out of Athens he was driven out of Athens after the war because he apparently, they turned on him, which was interesting. So here's a guy who did his job, saved the country, and then apparently became so obnoxious that they got rid of him. But I'd love to hang out with him.
You can't win sometimes.
He actually ended up in the court of Xerxes' son, Artaxerxes, and he thought that he got driven out of Greece. And he ended up being with the Persians, even though he was the one. And Artaxerxes said, "I want to meet the guy who beat us. Come on, join my court." So then there would be basically his kindred spirit from the 1930s and 40s, Winston Churchill.
Yeah,
Churchill and Themistocles were very similar in that they both, Churchill saw the threat to Hitler early.
yeah,
And he kept warning everybody. He was the voice in the wilderness. And it's very hard to imagine Great Britain surviving those years.
yeah.
With the years, but most Americans, by the way, are pretty. I'm embarrassed to say this, but Americans are pretty ignorant about everybody else's role in World War II, but ours. Mm-hmm. Like Americans basically think we landed at D-Day, just us, and we won the war. Which is ludicrous. Anybody who studied the Russian front knows that. But also, what most people don't realize is that of all the countries in the Allies, only Great Britain fought from beginning to end, and they fought for principle, right? They didn't fight. We were attacked. That's why we fought. Russia. Stalin was attacked. That's why he fought.
Yeah.
Great Britain had a moral obligation to Poland, and so they went to war with the most powerful country, would seem on paper the most powerful country in the world, based on principle. And a lot of that and Churchill was one of those guys who saw this guy Hitler when as the history, Halifax and others were trying to make peace with Hitler. He was like, no, this guy's bad news. This guy's got to go. So Churchill once again saved Western civilization in that respect. Certainly saved Europe. The world is much better without Adolf Hitler than it would have been. Obviously.
Completely.
And he was willing to basically bankrupt Britain, which is what happened to do it.
Yeah.
And most people don't realize that the British Empire footed so much of the bill of the war, and there's an old expression that says World War II was won by British brains, American brawn, and Russian blood. But even like and so I would like more Americans to know about Churchill, and I think he's been getting a bad rap lately.
Yeah, he does on this particular podcast. He does get a fair shout when I ask this question, so I'm pleased about that.
Yeah, and listen, there, nobody's perfect, and Churchill was a product of his age, but he was also a visionary, and he was also a mind, and also he got blamed for a lot of things like the Bengali famine that he had nothing to do with and stuff like that. But he was a guy who also warned about Stalin. While Roosevelt was basically being wooed by Stalin, Roosevelt was very naive when it came to Joseph Stalin. Churchill was just like, look, this guy's just as bad as the other guy. Yeah. So Churchill was able to read the tea leaves of the world a lot better than anybody else. And finally, it's sort of like my dark horse candidate would be a man who I've been following for years, is the economist and philosopher and writer American Thomas Sowell. And the reason is because I'm interested, because we hear so much about the civil rights movement and everything from one perspective, one side. Thomas Sowell was a man who grew up in Harlem in the 1940s, and he was highly educated. He's 93 years old. He just wrote another book. He's written like over 40 books. His books are fascinating sociological studies, and I think he's the most brilliant. He's arguably the most brilliant thinker that the United States has produced in the last 50 years, I think, personally.
Yeah, I don't know him. I've mentioned before.
Yeah, no, he's and also in the interviews I've seen with him, he's got a great sense of humor. He doesn't take himself too seriously, but clearly you watch this guy and you're like, this guy's a mind. This guy, and he brings a different perspective to everything from civil rights to economics to politics. And he, it's interesting. Like he said, when he grew up in Harlem, he said, we would sleep outside on the fireplace or on the fire escapes because it was hot. He said, we never heard a gunshot. Never, so he's very concerned about the decaying of the American inner cities.
Changed somewhat.
Yeah. And I think if he ever, I think his books need to be part of the curriculum, and they are.
No, I'll research them after this, actually, directly after this call.
Please, there are so many, if you say what's a good book, there are so many good books that he's written, and just start off just like, go on Uncommon, go on a podcast, Uncommon, what's it called? Uncommon Wisdom or something like that. Just look up Thomas Sowell Uncommon and you'll see. Yeah. And he's just a fascinating guy. Okay.
Brad, it's been amazing. Thank you so much. It's been an education. And incredibly insightful even. So thank you so much.
Thank you very much. And hey, stay warm out there in Great Britain. All right.
Well, it's really cold today.
Listen, I tell you what, like if your viewers don't know, but I was telling every time I go to the UK, I always bring clear skies and like 65.
You get on a flight now?
Yeah, so maybe it's time for me to fly out again.
I'll wire you some money to get on a plane now. We need
one of my favorite. It's actually one of my favorite cities. I love it.
That's
so
good.
I'm not just saying that because you guys.
Absolutely. And if you're watching this on YouTube, please do subscribe. Even it does help the channel. We're keen to grow and get more wonderful guests like Brad. So please do subscribe. And thank you for tuning into this episode of My Perfect Failure. We're always looking to grow the show. So please do share this particular episode far and wide, particularly if you know people that are intrigued about trading, either previously or in the future. This episode and Brad's book will be a great way for them to learn more. And your feedback is most welcome. We're keen to hear about the things you like and equally the things you don't like. So you can find me at paul@myperfectfailure.com, or you can find me via the feedback page on the website. So do take care for now. Bye.
Thanks for listening to My Perfect Failure podcast. Be sure to visit www.myperfectfailure.com to join the conversation. Subscribe to our podcast on iTunes or Google Play. Look out for our next episode.